Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Coinbase recently reported second quarter 2023 results, and there was a little bit for it, and there was something for everybody. There was some positives, there was a few negatives. I will cover the positives on a separate video, but I want to go through some of the negatives today because there are some things to criticize Coinbase for. Some of them are in the company's control and some of them aren't. So that's what I'm going to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, check out my deep dive on Coinbase. Got a link to that in the show notes. I'll start right here with some of the revenue information. And this is the big one. Total transaction revenue fell about 50% to $327.1 million. This is really where Coinbase made most of its money in the peak crypto days. So that's obviously starting to come down. Now, management did say that they did take market share, but given some of the uncertainty, especially in the US, the market is down. There is some ebbs and flows. So there's been some positive signs, at least a little bit recently, but the trend is definitely lower. So something to keep an eye on for Coinbase, because this is really the core of the business. The big concern is this top number, consumer trading. This is where Coinbase has a very high margin. You can see that went from $46 billion to $14 billion, just a dramatic drop in trading. The good news is that institutions are not dropping as much, but some of that institutional trading is related to market making. It's much lower margin for Coinbase. So from a profit margin perspective, you would like to see the consumer business actually doing better. We are also seeing people move back to the traditional tokens like Bitcoin and Ethereum, which are starting to gain market share as far as a percentage of trading volume. Here's another thing that was negative, and where this shows up is in Coinbase's interest income. So Coinbase owns 50% of the consortium that runs the USDC token. Basically, when there's money in the USDC token backed by Coinbase, Coinbase actually generates revenue from the interest of the assets that are backing the token itself. So higher interest rates means more interest income. Interest income is very strong at about $200 million for the quarter, but the market cap or total value of the USDC token has dropped by about 50% over the past year. We know that there was some odd things that happened, like Binance sold about $3 billion worth of tokens. The crypto market in general has gotten smaller, but you can see that the general decline has been really steady over time. That is a concern for Coinbase because this is basically free money that the company gets for just being a part of running this token. The final thing that I want to highlight is stock-based compensation. Now, this is pretty typical for a lot of tech companies, but I really would love to see this reversed. Coinbase is paying a ton in stock-based compensation. You can see that in the most recent quarter, about $200 million worth of stock-based compensation. And for the first half of the year, the number is $483 million. That is all dilution for shareholders. So you may have to pay people more in cash to be able to compensate them for working at Coinbase. But given those cost reductions that I talked about earlier, I think you could do that and potentially still run the business successfully without diluting shareholders nearly this much. Overall, I didn't think the quarter was all that bad, especially if you look at Coinbase as a long-term play on blockchain technology and the impact that that will have on the world. But there are some things to criticize for Coinbase. I think the big one is the drop in the USDC token. I don't know how they turn that around, but it seems like the market has definitely lost faith in that token. I would love to see that turn around because that's potentially $800 million in revenue or more just by that token existing that Coinbase is generating. So a potential great source of revenue as we get through this crypto winter and come out on the other side with more products and services. And right now, I don't see that trading revenue coming up dramatically in the future, especially when we think about the margins that they were charging during the peak crypto bubble days. Very high margins, very high fees that Coinbase was able to charge, but the market allowed it. So I think we need to see more of that subscription revenue, more of that interest revenue, because I don't know if that transaction revenue and margin is going to be coming back. But what did you think of the results? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. And thanks for watching, everybody. See you here next time.